Morning, Dale. Hello, hello. You're on mute if you didn't know, Dale. Oh, I don't know if Dale's coming on or not. If he's got a problem or something. Might be you and me again, Kay.
We just played a flow show recording.
Hello.
Hey
guys.
there you are.
Oh, there he is.
I'm so sorry I'm a minute late. How are you guys doing today? How's everyone doing?
Oh, we were panicking, mate. We were panicking.
Okay. Well, I don't think so. But here I am, and let's talk about what's going on. I mean, the feature for me is a 2-week reversal in stock indices. How you doing, Alexander and Steve and Ingmar sees an evening star, so along with that is a 2-week reversal. Hi, Hugo, AJ, John, Mike, Bran, Lowell. Boy, that's a long time. Parth, James, Laura, Marcus. You were crying? Oh my gosh. Darren Monroe, welcome to F.A.C.E. It's a place that you can become an ace. All right, guys, let's talk markets. Any big news coming out today, guys? Any data?
Canada jobs and Michigan flash number.
Okay, so nothing major. Right. Why is it major? I don't know.
You've just insulted all of Canada, but don't worry about that.
Well, yeah, they didn't win the World Series. All right. Anyway, 2-week reversal and how you come up with it. I've talked about it many times over the years. Is all you do is count back 2 weekly candles and look at the close from 2 weeks ago, and it was 67.98. So, we've done it by 100 handles. This 9-day is trying to hold, 9-week is trying to hold. And the way I see it now is that I know that there'll be some dip buyers, maybe, but it measures back down towards this Trump low on the 1-day 100% tariff raise on China that was reversed. I thought it had topped here, so I'm not going to get so, overly confident here, but this is pretty negative action. They've taken out, NVIDIA and Palantir and a lot of the darlings here. So I think we're going to the 65.20 level. And then my target is 61.40, maybe by year end. With all this uncertainty going into the end of the year, I'm sure we'll get a pop when they reopen the government. I think they'll try and do it before Thanksgiving. A lot of people like to travel and go see their families, and they're just cutting back. I've also heard that even if they ended it today, that there's longer term repercussions. A lot of these air traffic controllers have resigned. They're not coming back. So there's long-term damage with short-term mistakes, and we all know that as traders, right? That we could have long-term damage from making a short-term error, even though we may get out of that position. And I think that's a metaphor for what's happening here in the markets. Let's go to currencies. So we've gone through this resistance by a bit, Ryan, this 1550 level, and it's really, I think, a reversal week. Yeah. If we close here, we have a reversal week. So was that it? 1480, and now we're on our way to higher levels in Euro, EG.
I don't know if we can go and crack higher levels. I think, like you say, we can see a bit of a reversal. I don't think there's any reason for this to, go back to 118, 119 or anything.
Yeah.
But we're probably in a bit of a consolidation phase at the moment. But as you can see from that picture, we are in a bit of a downtrend, short term or otherwise. This will be quite a hefty step. If we close above your black line there, then that will slightly change the short term complexion. But unless we're back above that area, what do you got, 1660s, 70s? Just those recent highs, end of October, it will still look bearish.
Okay, and cable's still kind of bringing up the rear. You know, I don't like this. Okay, unlike Euro diverged at its lows this week. Cable did not. It confirmed. So, you know, normally that's just a low instead of the low. You know, if we break one more time, next time we could have some non-confirmations on that. Yen.
It's got every chance to do that. And I just want to say, Dale, you've actually made a really, as usual, made a really good point with your Thanksgiving comment. If Trump wants to tackle the shutdown, that's an opportunity. So perhaps we should pencil that on the calendar as a potential risk point for when the shutdown may end. Because you know what he's like. He's all about his approval and he's all about the stock market. And he won't want to upset people on Thanksgiving.
Yeah, so he's got a couple of weeks, right? It's not next week, it's a week after. So, yeah, maybe we get some things done by then. Yen had a negative week. Even with the weaker dollar, it's not doing much. You know, in fact, we're cracking this wedge here. You and I talked around yesterday that the yen did not make a new high when it rallied here, and so it could be vulnerable. And just, you know, simple measurement move would be, you know, 1.5 from here, from 53, give you 1.5. It's 150 pip range. So if we break the range, that's where we could go in the yen next. What did you do with Canada? We talked about Canada yesterday, what a little minor pullback it was, and you know we rallied back to the highs. I think we took them out by a pip. So, what are you doing into the number?
Into the number, nothing. I'm just managing what I've got. I've no inclination to buy a dip unless we get maybe down to the low 140s, that 140, 20, 30 area we messed around with for so long. But I think if we can hold 140 here, then it'll give it a bit of a base to go and take out those highs. But let's see what the jobs number does. If it's a super bumper one, then we could get that steeper dip. We're looking for, because it was such a good one last month, 60,000 added. We're looking for a loss of 5,000. Full-time workers was a bumper one at 106,000. With this number being so volatile, there might be a risk that if it's a bad one, it's going to be worse than minus 5,000 if it's a bad one. And then that might take out the highs. But you never know with this. It could be another bumper one, and that'll give us the dip.
Okay. We'll see. The dollar could turn here. That would help. I want to go to my trading warrior brother, Kman. Good morning, buddy.
Dale, Coach. Good morning. Good morning, everybody.
So we're getting this, along with the dollar softening and yields coming off. Gold's trying. You think we're going to get this moved now finally to 4,100 or so, and it's been kind of holding and basing that we could get a pop here in the metals.
Gold is triangling, and we should be on for our next move soon, I think. It was yesterday. I was a bit surprised because gold being a bit of a hedge, in a way, it did come off $50 on the together with risk. But then we based exactly where Asia was buying it again, and they bought it again overnight. So I think if we continue to trade now, the shutdown, maybe that Challenger report from yesterday could be quickly forgotten, that one. But the dollar, at least versus euro, and maybe another couple of exceptions, and especially versus the euro, is trading exactly as I thought it would. The shutdown, first of all, we ignore it. Then all of a sudden, yeah, it's starting to have an impact on equities. Then we saw that first move where the dollar was kind of a safe haven. But when you get on top of that, that Challenger report yesterday, that was what started to put the euro and the euro crosses as well. I mean, if you look at the euro crosses, they are doing relatively well, putting a bit under there. And I think I'm not going to say it's the start of, but I think the euro should continue to do well for as long as the shutdown goes on. So yeah, I think euro could trade a bit higher. And then if you're looking for that hedge, yeah, as you say, gold maybe finally that move up to 4100s, but it's pretty stubborn around 4K. I'm just very small long. Thinking
Yeah.
it may go at one stage it may go, but we also know what gold can do, right? It can do that $100 all of a sudden on a Monday morning.
Yeah.
Yeah, and in regards to the yen is a struggle. Yesterday it traded completely on the back of lower risk, and then overnight Takeichi came out with some nominations for the government, which are mostly ex-Abe people, and a very dovish Kuroda period Bank of Japan time member, Wakatabe. So she really she's making us think about what to do with the yen, whether we trade it on the back of lower risk or whether we trade it on the back of that. After all, she is going to push for a second round of Abenomics. So yeah, I'm still
Good.
leaning in the second camp. I find yen is having trouble, not specifically dollar yen. Dollar is a different one. But the rest, and then I'm long euro yen again. In the end, I think yen is still going to weaken just on the back of Takaichi's program.
Well, looking at euro yen, I pulled it up
Mm,
here, and it looks like it has one more push,
mm,
Kman. Here's one, here's two. It's
yeah,
not complete. We could get one more push up here.
79.
What do you think would drive it? The euro going higher or the yen going higher? Which would be the driver to take it up here? The
I think
euro?
euro. I think euro.
Yeah,
Personally, from where I'm sitting right now, euro.
yeah,
Dollar yen could remain supported on dips, but I that's why I prefer the euro. I
yeah.
don't trust the dollar too much right now with this shutdown and thing.
Okay. All right, just to, kind of give people an idea of some of the damage that's done
Yeah.
this week. Here's the mags. I mean, we're going to open underneath this breakout line. Here's the socks. Well, that's the other one here. Where's the right
Barry,
here?
Barry gave the Barry gave the signal, right?
Who did?
Michael Barry gave the
Oh, yeah,
signal,
he
right?
did. He did. Yeah, he's probably had a great year this week.
Yeah. Who
Um,
who was the guy when remember when we were the 10-year went up to 5%? There was this macro fund guy who came around and he said like, that's it, I'm buying bonds, and the bond market stopped like
turned.
dead and turned around like really massively, and 5-year went down in one go from 5% to 380, but I don't recall exactly who it was.
Yeah, I'm not sure either. I don't remember.
Hmm.
And that's unusual for me, but I I have old timers when it comes to that. Just also want to show what's been happening. Just take a look at some of the other mags. Here's NVIDIA.
Hmm.
So look at that. That's pretty
Yeah.
ugly. Uh, I put out a tweet when it comes to like S&Ps, and Peter Brandt started talking about it a little later, but do you guys believe in exhaustion gaps now?
Gaps, I don't know, but I mean, it's
That was an
something that
exhaustion gap.
I don't know what it is. I don't know what it is,
Yeah.
Dale. I've never traded the stuff like that. But no, I'm just want to say that in the global scheme of things, what's happening now, I think it's relatively it's logic. I mean, the longer we said it when it started, the shutdown, if you get a quick resolution, quick solution, it's not going to have any impact. But the longer it lasts, the more the risk is for that impact to come. And I think we are seeing it. And then you have the individual ones, of course. Nvidia is they don't really know how it's going to go with China. I think they still have restrictions on
Yeah, there are.
sending stuff to China. So that's then the individual ones. But I'm
Yeah, but
finding this
it
whole
was
thing
pretty
relatively.
broad base. I mean, the people that were bullish, semiconductors, they kept asking me about AMD, and 2 weeks ago it looked great, you know.
Mm,
But this was a star over the last few weeks, so that still has. This was an earnings gap. This is the exhaustion gap that it's filling. So we'll see. I mean, if there's ever a chance for, I'm not calling for a crash or anything. I'm just thinking 10-15% correction in
mm,
the market before we turn.
yeah.
So that's, oh, I also wanted to ask you guys, both you and Ryan, if you think that yields have turned. We had a pretty negative day yesterday. So we're back. We never got to 420. This, just like the end, looks like we could, head down again. Here's one, here's two, and get another decline to take yields lower again. Um, do you think we're headed that way? Maybe that's the reason we're getting relief in euro.
I think we are, but I wouldn't be surprised if we pop up through that 420 if the Fed hold in December.
Okay.
And then
Uh,
after that, you'd think, depending on what the shutdown's doing, what the data's doing,
yeah.
if they're going to continue on rate cuts after that, if the data says so, then they'll get back to cutting and we'll come back down again.
Okay. Well, if we're under 65.20, when's the Fed meeting in December?
It's the 16th, 17th, something like that.
Oh,
The what?
wow, right around the solstice.
The
So
what?
the Fed meeting.
Fed.
Yeah, 16th, I think.
Okay, so that's also right around the
No,
winter
no,
solstice.
actually on the 10th.
10th? Okay.
Was it?
So
Oh, nice early.
if we're taking out this low into the Fed meeting or before the Fed meeting,
Mm.
they'll ease. I think they'll ease if the market's starting to give up the ghost.
Yeah,
Um,
but your president may already have intervened in the meantime.
for lower rates with what?
No, for ending the shutdown
Oh
and putting a
yeah,
bid under the stocks.
yeah, yeah. We'll see. Um, so let's kind of recap the week. Euro's acting stiff. It's acting good. We'll see how the
Yeah,
rest of the
I
day
think it
goes.
can continue.
Yeah. And also EG looks like it has another shot up um, for a new high. A lot of three drives are setting up here. So I think it's next week. EG could be making a new high. Um, yeah. So
I think
go ahead.
I think Steve maybe here as well. Steve, you're around?
He was here
Yeah.
early. He was here earlier.
Oh, yeah.
Am I around or am I around? What was the question?
Both.
Are you round and are you around?
I am round. Yes. No, I'm not. I'm not anymore. I'm joking.
So what's a feature for you this week, Steve, in the markets?
It's, in my opinion, the highlight of the week is obviously equities and the potential of a deeper pullback.
Okay. And you have any levels that you think it could pull back to?
The S&P is currently testing ascending channels
67.
trend line support, which is key. And we know the reason why, right? Because the S&P has always been the benchmark, right?
Right.
For risk assets. And that is why I pay mostly attention to it. Having to do with anything else, I think the jury is still out. I still see the potential for deeper corrective move in the metals, obviously. But who knows how deep we can go. We can definitely go deeper, but I don't know how deeper we can go. There are some key levels that we've discussed multiple times in the webinars as well. And having to do with the dollar, despite the last couple of days of a pullback, is still above the 99.40 level, which has been a key breakout level. So the path of least resistance for the dollar, in my opinion, remains currently higher until proven otherwise.
Okay.
We have a market.
Yeah. So as far as the metals are concerned, maybe we get, Steve, some type of, if this is correct, if this could be A, and we get some type of B, and then we'll be able to figure out what C could go to if we get a failing rally in gold. Yeah, you think that's a possibility here? Failing rallies in both gold and silver, maybe back to 50 in silver.
I personally think that yes, for the time being, rallies can end up being corrective within the context of a larger correction lower, right? I want to make that very clear. I don't think that the trend has changed for metals. I think the medium to long-term trend remains higher. But obviously seeing the first likely proper corrective move in such a long time, it definitely has the potential of running much deeper or more prolonged, right? Because both are potential outcomes, right? We can either run much lower, or we might build some kind of a larger consolidation that will take more time to get resolved. One of the two.
Okay. And any view on yields? 10-year got up to 415 after the cut.
I believe that the move higher in yields is a very normal one.
Yeah.
Because the Fed cannot control anything other than the very short-term yields, right? With the exception of when they did, for example, the Operation Twist, if you remember, in which they were selling bonds of lower maturities to buy bonds of longer maturities, and they tried that. They tried that after QE3 to bring longer-term bond yields lower. So,
You know where central banks learned that open market operation twist? From Chubby Checker. Do you remember Chubby Checker? Anyone out there?
Yeah, I do. Unfortunately, I do.
You're the only one that I could bring back the past, Kman, and everyone else is scratching their head. I'll Google it. They'll Google Chubby Checker. Go ahead, Google it and get up and do the twist. Anyway, so lower yield, Steve, bottom line.
No, I don't think that the longer term maturities are going to respond with lower yields, because the side effects of cutting rates in an inflationary environment is going to be yields to actually be moving higher.
Okay.
Which is exactly what the Fed doesn't want. And that is why I've been saying for quite some time that I do think that the Fed is inevitably going to end up doing quantitative easing as well again.
Yeah, I kind of agree with that. They could start actually very early without even calling without even giving the baby a name to buy bonds, to buy notes, etc. I mean, they don't need much. They don't need an FOMC meeting either to start doing it if they would judge it necessary.
We're going to find it by looking at the balance sheet.
Yeah, and looking at maybe even though we are not like at huge stress levels yet, but there's a lot of chatter around that repo market, so they have to look at it as well.
Ryan or Kman, do you mind taking over the chart? I'm going to go. Forex Guest Hunter is going to go look for our guest. We have a new guest today, Dean Christians, and I'm going to see if he's having any issues getting in here. So if you would, someone take over the screen for a few minutes.
Ryan.
I was going to say, do you want to take it, Kay? Because I'm just getting set up for the data.
Okay, yeah, sure, no problem. Let's have a look. And just going to repeat what I've been saying on the flow show. Really, that magic level, that level in the cable is for at least for the short termers, is really starting to show a very interesting picture around 130, 140. We see having had a play already here. Then back in May, back in August, it was an important level. We stopped on it end of October, tried to figure out what to do with it, went below, and we banged our head again against it again overnight or yesterday evening. So for the end of the week, this is a pretty important level to watch on the cable, depending on where risk as well is going, but also if it would be the case that the market has to cover a bit more dollars on the shutdown not being resolved. Keep a close eye on it, and we are very close to it as well, 130, 140. So this is an interesting one to watch. Where I want to pick Steve's brain. Steve, are you still around?
I am still around, yes.
Yeah, okay. Look, this is silver, right? So we have this correction low 45.5, call it 45.5, and we broken here below that 49.80, 50.20, right? That was like the prior high where we set the correction in, and then we have been like kind of ranging, right? If risk is coming down, because I have this kind of theory that if for silver to do better than gold, the economic situation should be slightly on the more positive side, but we are seeing
that is how it usually is, indeed.
Yeah, but we are not seeing this kind of positive vibes, right? And
we're
now
not
it's coming down. So why is silver holding up relatively better in your opinion?
In my opinion, silver is holding better because it has run less than gold. Second of all, it has broken through. It has broken through a multi-year level that's super important, and that is creating expectations that it can actually overperform gold, in later stages. So I think that's why.
Okay, because if we look at it, so we have this corrective range, right? Where we're in right now.
Yeah, which is probably some kind of a B.
Yeah, but the thing is, and that's where I'm finding it holding up much better than it should in theory, is if you take the middle part of it, like around that 47.5, it's actually trading above, where I thought the logic would have been that we trade, even if we are still correcting, that we trade in the lower part. So that is like somewhere $3-4, which is nearly 10% lower than where we are actually now. I find silver holding up very well, actually.
Yes, it is for the time being, but as I said, I think that this is mostly a result of silver having broken through a very key level.
Big one. Sorry, Steve. Big one.
Sure,
Up
mate.
66K. Up 66K.
That's a real good one.
Yep.
Wow.
Unemployment rate 6.9%.
Wow. That's a very good one.
And that's even with the participation rate going up. That is a good number.
Yeah, maybe that's the correction that people are looking for then in the Canadian? Yeah, Canada is really strengthening, right? We are trading at around one. Well, let me pull up the dollar CAD then. Dollar CAD on the shorter. So we are really dropping, and where it would have been suspected to find the first few bids around 140.80, 140.70. It's breaking through now.
Yeah. The only minor negative is that there was a reversal in full time. They came in minus 18,000, and part time went up 85k. Maybe some holiday hiring in there.
Yeah. Oh yeah. It's all part time. Yeah, absolutely. It's all part time, but the wages are doing pretty well as well. They jumped from 3.6 to 4%. Yeah, so not so sure, but what I was putting up on the morning updates is that if ever we get back into this, what is it, 140 and a quarter down to 140, we have a lot of traffic around here. Also, quite a few fibs and retracement levels in the mix. So if ever we would see a continuous drop this afternoon of the dollar Canada, I think people should really closely watch that 140.0525. And I think it's your level as well, right, Ryan?
Yeah, that 25-30 area. Yeah, banged head on it enough on the way up.
Okay. Dale, have you found your...
Yes, Dean's here.
Okay, I stop sharing and over to you, my friend.
Okay, listen, I want to thank all you guys. I want to thank Ryan and Kman and Blake and Absentia and Celios, the whole team for doing another great job this week, and keeping people away from landmines and steering them towards potential opportunities, managing risk. So thank you guys. Another week in the books for the Dream Team.
Cheers,
Thanks, Dale. And thanks to you, mate, for leading us, being our shepherd.
Very welcome, and I'll always come looking for you, Ryan, because you're always straying from the flock and taking time off. And you know what I may have to do is break your leg, carry you over my shoulder until you learn not to leave the herd anymore. What do you think of that? Huh? That's pretty good psychology, huh? Anyway, yeah. All right. Thanks very much, guys, and everyone. New guests to F.A.C.E. I've talked with Dean before, Dean Christians. I love Dean's work because he really looks under the hood. He was putting out some warning signals about the market with some of the breadth numbers that he was getting and some very unusual things that were happening in the market over the last 3 weeks. So welcome to F.A.C.E, Dean. Glad to have you. And why don't we start off with what you and I talked about a week ago. Things are manifesting to the downside. Do you still call it a hold market?
Yeah, I've raised a little bit of cash. My main risk off composite triggered a signal Tuesday on the close. And so I, had to take the steps of raising some cash. So yeah, I mean, I would not be initiating any new positions here. And I put that out, 2 weeks ago to subscribers saying, hey, look, we've got a few new signals here in the risk off composite. I would hold off on any buying. And, that's turned out to work out well if people adhered to that. And then again, this week we had a few more signals. We got a composite signal, risk off signal. And again, I've raised a little bit of cash in the PAs. And, I think we're just sort of in a wait and see mode right here. If we see further deterioration, then, I would raise some more cash. But, things, I would say the good news, Dale, is so far, we haven't seen an expansion in 52-week lows. So we saw a few instances where the S&P triggered a signal, the S&P 500 financials triggered a 52-week low spike signal. But since then, we haven't seen those 52-week lows expand back out, which is a good thing. Now, again, a lot of it's just kind of related to the fact that we have this two-sided market.
Yeah,
right?
Yeah, maybe those ones that have been making new 52-week lows for quite some time are already washed out, and now what's made the averages look good is vulnerable. Things like Nvidia and Palantir and the beloved issues that were driving the rally unwinding here. So
Exactly. Yeah.
that it? Okay.
But you know, for those stocks, you know, you're not going to see, most likely not see 52-week lows, right? Because
No, no.
they move to the upside so much. Okay.
Yeah,
But
yeah.
you could see an expansion in you know, 21-day lows or 63-day lows, something of that nature. So yeah, I wouldn't, you know, and look, unless this is a, you know, 15 to 20% drawdown scenario, you know, you're not going to see a big expansion in new lows probably at this point, because again, this is what, you know, again, what we saw was a sort of general weakness in the staples, real estate, so stuff that's sensitive to the interest rate environment, you know, some other areas, insurance and stuff like that. Then they started to take down sort of those non-profitable tech stocks, you know, and so those all peaked out about a month ago. And now what they're doing is sort of taking out the leaders, right? So any sort of incremental bad news or perceived bad news, right? So you look at like MCOR down like 18% on its earnings because they didn't say enough good things about future expectations, or even Palantir, you know, trading down like it has, you know, just at the margin, things are so stretched to the upside and all these AI names that just any sort of incremental bad news and they're all going to get whacked. But, you know, structurally, you know, they still look okay. They've had these sharp down moves here.
Well, do you think a 10-15% correction, which is what I talked about when we were last together, is becoming more possible because of what's happening this week?
Yeah, I mean, look, you can't rule it out. You know, if we take out that, you know, that pivot point, remember the big down day on October the 10th? I mean, if we were to go down and undercut that, you know, it could snowball. And you know, when I started to think about this, in some ways it reminds me of Q4 of 2018, right? So we had a Fed policy mistake, right? And the market just swooned during that seasonally strong period when it's supposed to go up, right? Remember everybody saying we're supposed to be going up now.
The Kramer rant. The Kramer rant,
right? And so the policy mistake here is the shutdown, right? And nobody's willing to budge, and this thing just keeps dragging on, and then we keep seeing, you know, incrementally bad economic data, right? And then that just all snowballs and feeds on itself. That's, to me, that's worst case scenario, right? Okay, is that this is a policy mistake and gets exacerbated just by a big position unwind. Everybody's trying to protect their profits in these, you know, AI related stocks, and it just snowballs. Now look, we could come in on Monday morning and the market's going to gap up 2% because they have a deal, you know, and the shutdown's over, and then you know, you got to reassess. Okay. But for right now, I think, you know, you have to err a little bit on the side of caution here that we could just continue to sort of see a slow dribble down. And then again, like if we were to break that 10-10, you know,
65-20.
Yeah, that support area, for you to break that, then, you know, you could open up the door for, you know, the market, you know, potentially going back down to
how about here, the prior all-time high?
Well, yeah, the old high. So that'd be, you know, 6150 or something. I mean, again, that's not my base case or anything, but that would be the worst case scenario of downside risk, and something like that. So
all right. I wanted to ask you, do you think the CEO of Palantir needs a good IR department, investor relations? Did you happen to catch his talk on CNBC about that, you know, how upset he was about his stock being attacked by puts, and that he has made the little guy in America rich, and that they're a great company, and You know, it really shouldn't, they shouldn't be picking on them because of what they've done for America. And you know what they've done for America is made surveillance an art form. So you know, methinks thou protest too much. Is that the
Well,
way it feels to you with this Palantir guy?
listen, I don't really like to get into those type of discussions. I mean, look, Michael Berry has a fundamental view of the stock, and he's expressing that fundamental view via, you know, a bearish put position. I don't think
Yeah.
there's anything wrong with what he's
No.
doing.
Yeah.
You know, and so you know, look, that's happened throughout history. Whether it works out or not, who knows?
Yeah.
And you know, as far as CEOs go, I mean, you know, at the end of the day, I think they should probably just, you know, put their head down, keep grinding, working hard every day, and if they do the right things, you know, their stock's going to go where it should go. But to get into these sort of public, you know, debates and arguments and what have you about who should be doing what, and I just think it's kind of, you know, nonsense, to be honest with you.
Okay. I think that the VIX is flashing a pretty important signal, closing over 20. It's above all the moving averages, put in a higher low. Does this give you even more caution? You know, for us to get back to 28 could happen.
Well, yeah, I think that the 28 scenario is, you know, again, we undercut that support from October the 10th.
Yeah.
I think that would be it. You know, I don't know. I'll probably go take a look at it today, but you know, it'd be interesting to see like how many times the VIX is above 20, you know, in November or even December, you know, again, during that sort of that seasonally strong period. You know, when you're in an uptrend and, you know, how many times has it popped up above 20 or 25 or something that would probably be pretty interesting to see, which I may look at after we hang up here.
Okay.
But you know, you guys were talking about gold earlier, and you know, I think we had discussed this earlier. You know, I put out a note saying, you know, hey, be careful here in the short term. Could be some sort of, you know, short to intermediate top. I mean, even the historical data indicated a significant top, but I, you know, again, I think the jury's still out on that. But I will say this. Let me, Dale, is it okay if I share my screen?
Oh, that'd be great. Go ahead.
Okay, let's go ahead and we'll take a look. So I've got okay, here we go. Let's see. Where's the screen?
You know, Dean's got, I think, over 120 years of data that he, you know, looks at things that, you know, outliers of things that haven't happened, like, you know, where they were selling off the staples. Have staples recovered during the sell-off, Dean? Because everyone hated them a week or so ago.
Yeah, hang on one sec. Let me find this
Yeah.
to share. Oops. Okay. Can you see this screen, Dale?
Did you click share on the bottom?
Let me go back. Let's see here.
It's a green icon that says share at the bottom of the screen.
Okay, there we go.
And you click there.
Yeah. Okay.
All right.
All right. Yeah, well, we can take a look. We'll take a look at staples in a second. But anyway, so this is my my dual trend system. I have a long-term version and a short-term version. And what you can see, these are the gold and silver miners, is obviously the long-term version has stayed bullish, right? If we scroll down, you can see the vast majority of these stocks are bullish. The trend scores are high. You know, you see the trend and the relative trend. You know, all of these are 90, 100. So it looks good. Short term, though, what we've seen is a lot of these turn negative. And again, this is a shorter term model. But what you can see is you know, most now have moved negative, or you know, or close to turning negative. So I think it's really important here for gold and for silver we need to hold where we are right now. You know, otherwise, you know, we're going to see more of these short term you know, signals turn negative, and you know, given the big move they've had up, you you can't rule out even further downside just as a position unwind. I mean, if you look at something I was looking at, like, First Majestic Silver, I mean, it's down 30% now off its high. So again, it probably needs to hold right around this area here, or this thing could be unwound. So pretty critical here in terms of what's going on in terms of gold and silver. And it looks like to me like we're trying to hold,
moving sideways.
Yeah, so we've got a sort of sideways movement. We got the 50, we're still above the 50-day, at least in GLD. So, I think we need to probably hold that rising 50-day, and I think we'll be okay. And then, then what I'll look for is for these short-term models to sort of kick back into gear and switch back to bullish. And then that'll be a pretty good indication that, the uptrend is resuming. But if we don't see these things turn back up, then we need to reassess. But okay, so in terms of the staples, let's go take a look at the S&P 500.
I also wanted to ask you, do you view Bitcoin in any type of correlation with for risk and liquidity that plays into your thinking about the whole puzzle of the markets?
Yeah, that's a good question. I mean, yeah, you hear that quite often, this, oh, well, it's a risk asset, it's going up, therefore all risk assets should be doing well, or it's going down, that's a warning. The problem I just have with Bitcoin and really, all the cryptos is just, there's just not long enough history, right? So, if we could go back and make comparisons to, say the early, starting in the early 90s and see multiple bull and bear cycles across stocks, across crypto, I think you'd have a better case to say, yeah, it's a good, tool to use in terms of risk on or risk off. But I just don't know if that's the case. And one thing's for sure with the Bitcoin is, look, it's not trading now how it used to trade. Okay, the up cycles seem to be shorter. The down cycles are still pretty violent and bad. But what we're seeing is as it becomes a more mature sort of asset is just those up cycles. There's up cycles are just less and less. And this is really
the institutions ruined it for the retailers, huh?
Yeah, and to that point, I had a guy reach out to me on X, and he said, "Hey, what are you doing? I'm thinking about, I want to move over and trade stocks. I've been trading crypto, and it's just too difficult now. It's hard to make money in crypto." And so, look, I don't know whether that one person, whether his view is the view is a view of everyone in crypto land, but again, there's so much risk on those downside moves, like what we saw, with these liquidations recently, that, if you're getting blown out down 30, 40, 50%, and then the upside, right, is only 20, 30%, your risk reward is just not great. And I think that's what this guy that reached out to me is saying, is the risk reward for trading Bitcoin and these other, cryptocurrencies is just not there. The upside is just not there compared to what could happen on the downside during these liquidation events. So, again, that's my 2 cents. I don't know whether I'm right or wrong, but look,
appreciate it.
Yeah.
Go ahead.
So let's look at the staples here. Again, if you look, pretty much across the board, everything is bearish. There's a few handful of names here, Monster, Estee Lauder, and stuff, but generally speaking, when you look at the consumer staples, they're weak, and you're not even seeing, like, my short-term model, you're not even seeing any of that kind of stuff turn up at all. So, this is a group where, it's an avoid for me. Really, it's only something that you start to think about in bear markets, where you just want to, you're an investor that has to be allocated to stocks, and so you need to then gravitate towards consumer staples, and don't hold the ones that are super overvalued. But yeah,
How about interest sensitive, Dean? The bonds yield started to drop. They've backed up since the cut, but they started to drop yesterday. Is there anything in I know utilities aren't a rate play anymore, but I think REITs are, or not much there either, mainly
Well,
bearish.
let's take a look at the REITs. Yeah, so if you look at the REITs,
Nothing.
I mean, pretty much
Yeah.
across the board, it's it's pretty bearish. I mean, there's a few things here, Prologis and Welltower. So here, this is interesting. So again, REITs have just been pretty much a place you have not wanted to allocate. But my system here in Welltower picked up a buy signal 379 days ago. It's up 99% since that buy signal, and it's outperformed the S&P by 65%. So,
Wow.
again, there's these one-offs, that you can find in these sectors, whether it's real estate or whether it's staple. There's probably a few more one-offs in the healthcare area. And you can find, sort of a diamond in the rough in these sectors. But, the general rule, Dale, is in an uptrend, you want to be in the cyclicals, right? So you're in tech, you're in industrials, financials, and consumer discretionary, especially if it's early cycle, you want to be in consumer discretionary. So, that's the area where I tend to focus the most on. When we're coming out of a low like April, I'm looking at nothing but cyclicals. I don't care about any of these defensive groups whatsoever.
Okay.
But again, if you're someone that's running a diversified portfolio, you can certainly look in here, and again, you'll find one of these sort of names like a Welltower or something of that nature. And you can have some small positions, but it's not a place that you want to be overweight or even really market weight.
What I like about your work, Dean, is you're like Gretzky. You're not, you're skating to where the puck will be, not
Right.
where it is right now. So we're in a correction right now. You brought up one positive, that there weren't a lot of new 52-week lows on a down day yesterday. What else will you be looking for that's going to tell you that this correction's close to being played out and that the uptrend would resume?
Well, look, I've got a number of composites and indicators that I looked at that'll tell me whether the market's oversold or not. And so I'll be watching those. But we may, again, it's hard to know whether we get that sort of oversold condition we're looking for. Again, a lot of these stocks, the average stock, again, X, the whole AI trade, a lot of these stocks are pretty, they're down and washed out. I mean, they are oversold. So you could make the case that, there's a lot of stocks that are oversold, even though, the broad index is trading 2% off of a high, so, now whether those stocks bounce, and outperform the broad market, that remains to be seen because, again, this AI trade is so entrenched, right, in the mindset of investors and traders right now that, again, that's most likely where everybody's going to go right back to, especially if they sell these things down and they're down 20%, but structurally they still look good. On the charts from a long-term perspective, people are going to go right back to those names,
like
again,
140, like NVIDIA at 140.
Hold on, let me pull up, I'll just look at a chart here. Yeah, I mean, look, whether it gets to 140 or not, I don't know, but you could certainly make the case if this is a correction that, NVIDIA is just going to come back into its range that it was in, right? So, between, let's call it early August to sort of, mid-October, I mean, it was just range bound, right? And then it had that pop up. But, look, I mean, again, this chart is obviously it's a $5 trillion market cap. So it's mirroring the S&P 500 pretty closely. I mean, you have this breakout, and if this thing comes back down and undercuts, 180, then you're down at 165-ish or so. I mean, it could, they call it, what do they call this, Dale? A bull trap, right? People buy it and then it just completely fails, and then they're forced to immediately sell. So yeah, it'll be interesting.
Don't you think people are going to be buying the dip all the way down, even if we have a correction? I mean, I'm sure there are people that thought yesterday was a buying opportunity.
Yeah,
or the last couple, right?
Yeah, no, they will. Again, that's my point is people, it's so entrenched in traders, investors' minds to buy the dip and especially buy the tip in these tech stocks. That's where they'll go. I mean, at the end of the day, I was talking to someone the other day, like, if you look at the 3x levered ETFs or the 3x levered single stocks, I mean, they're all growth tech stocks. I mean, they're not coming out with 3x single stocks that are, steel companies. I mean, it's Nvidia, it's Apple, it's Amazon. So all this stuff just feeds upon itself. When the crowd gets going in one direction, it feeds upon itself.
Steve, mute yourself, please. Thank you. Okay, well, Dean, I'm glad that I was able to introduce you to our community and hope that you'll return. I have like a 3-4 month rotation where I just bring back people that I know are edifying people when they come in, and hope you agree to it. And your reason for starting Turning Point Market Research?
Look, I've been in the business before and really just wanted to do something on my own, be a business owner and, and really show people this is how I manage my money on a day-to-day basis. These are the tools, these are the indicators that I use, and really, show people that, it's something that works. So.
Okay, well, I've become familiar with you over the last 6 months, and I like your work, especially since you see things before the market recognizes it. And almost every statement that I've heard you talk about is balanced, not hedged. Yeah, it could go up unless it goes down, but if it goes down, it could rally.
Yeah.
That kind of analysis. So do you have rooms here, or how do you communicate with your subscribers?
Just via our blog. So we have, we post research notes to our blog, and we have other communication methodologies. But we just launched just a little about a month ago, and we're looking into some sort of subscriber chat service.
Yeah.
And so we'll get that up and going, whether it's on Discord or something else. That remains to be seen. But yeah, we'll have a chat service. Also, Dale, I want to mention, I've got a free chart of the week series that I typically put out on Saturday mornings, and it's just sort of a theme, idea, event that caught my eye in the week.
Yeah.
And again, you can go sign up for that and get that each week via email.
Where on the website?
Yeah. Okay. So if you go to our website, there's an area there where you can sign up for that. But I wanted to mention it because I think people are going to be really fascinated by the chart of the week this week and what it's showing, comparing current environment to the environments going back all the way to the 1920s. So if people want to get that, go register for that free chart of the week. This week's is going to be an eye opener.
Okay, so where on the website can they find it?
Let's see. Let me go find. You should
on
be able
the blog.
If you go to the home page and you scroll down, there it is, all the way at the bottom on the home page, Dale. It says "Get our chart of the week," and you just pop your email in there.
And, beautiful.
Yeah.
All right.
Yeah. So
there you go. I look forward to receiving it, Dean, and look forward to talking to you again and keeping in touch during historical period in our country and in the financial markets. And it's good to have a watchman like you out there looking under the hood for people and not looking at the obvious. And I'll tell you, it's Friday, Dean. I feel as old as your historical data today.
It's been a long week, huh, Dale?
Yeah. It's
I think you need to wait a few more hours before you pop that beer open, right?
All right. I promise. I don't drink and trade. But Dean, Dean Christians. Follow Dean on, would you rather have people go to your @Dean Christians X handle or to the new handle for Turning Point?
Yeah, I would do the new handle, which is @TPMR Signals. But yeah, you can
There
find
you
that
go.
on X. Yeah.
Okay. So have a great weekend, Dean.
Yeah, thank you. You too,
And,
Dale.
you know, I mean, thanks for alerting me to some of the negatives that were happening before price action confirmed, and appreciate it. You're a pro.
Thank
That's
you,
all I
Dale.
could say.
Appreciate you having me on.
All right. So
Okay.
that's Dean Christians, everyone. Follow him on X. Check out his chart of the week. And have a great weekend, everyone. Don't just count your pips, count your blessings. We'll be back here Monday. Aren't we lucky? We get to do it all over again next week. So adios, Dean, and
Yep.
see everybody, and enjoy your weekend.
Have a good weekend.
Adios. You're welcome, everyone.